I'm Caryn McBride. Thanks for tuning in today. We're on MarketWatch, and our guest today is Anthony Domino Jr. Anthony is Managing Director of Associated Benefit Consultants in Rye Brook. Anthony, thank you for joining us.
My pleasure. Thank you, Caryn.
Actually, Anthony, you've been on the show a few times.
Now it's a few.
And we're going to have you back for more.
Great.
Anthony, tell us about what's going on at Washington Mutual.
Well, Washington Mutual certainly is a victim or casualty of the over-aggressive approach that occurred in the mortgage lending marketplace. And that's really a result of what I guess today we would call the perfect storm of two or three situations and circumstances that piled upon each other are happening in a certain sequence that they happen, created major problems. So if you bear with me for a minute, I'll give you a little longer answer to this, but I think it'll make more sense. Bonds, like anything else, are rated. AA, AAA, B, C, and credit is rated as well. So someone who's never been late a minute paying anything and has more than enough cash flow to support their debt gets top rating. And someone who has defaulted regularly or stretched in the past or not necessarily been able to meet all their obligations, or perhaps sometime has too much week at the end of their paycheck, right? Runs out of money on a regular budgeted basis. Those people have lower credit, B or C credit. So what should have occurred is you should have more aggressive, strenuous requirements to give someone a mortgage of X dollars. We'll use $1 million as an example. Someone with great credit should have a different set of criteria applied to them for mortgage and rates as well, because the market has to adjust for the risk of the loan than for B or C credit. So someone who has not historically done well in servicing their debt is going to have to pay a higher amount or work harder to get credit. That totally, because of the long-standing, factual, real, repetitive increase in the real estate market, banks would let someone buy a piece of property for which they probably would not ordinarily qualify, but they said to themselves, well, who cares? We've got property that never goes down, right? Real estate is guaranteed return on your investment. It's the greatest American investment ever created. The market has a way of punishing anyone who believes that there's no risk whatsoever in the marketplace. So as soon as people believe that they can't lose, they're almost assured to lose historically.